Okay, welcome everyone. We're going to start into the indice charts, looking at kind of what happened today, what's really going on, looking at multiple markets to really help us determine where the market's potentially heading here in the future. Couple individual stocks I want to point out. I don't have anything too extreme or crazy today. Today really did seem like a little bit of an extension of last week. So we want to look at where the setups are. I don't see I don't see any real triggers, except there is one stock I want to point out that did trigger a sell signal today. So, all right, let's look here at the triple Qs. Today, they basically bought the dip and bought it back up from where it sold off, last week. So we've been kind of chopping around the last couple days, really going back to about January 7th or so. We've just been kind of chopping around. We have not made a new high, but we also, haven't closed on a new low really on this hourly chart. Let's look at the daily here. Daily here, again, you can see we've just really kind of gone sideways for the last 2 weeks. We still have negative divergence that just remains intact and continues to build. So until we get that catalyst or that big sell signal, then for me it's not like a full all-in short on the indices or anything like that. You do need to see that catalyst or that sell signal, and we don't really have yes, there is a sell signal on the Qs. The sell signal was back here. If I go to the hourly, there's your sell signal right there. We did a back test and we have not negated that pattern. So it's still intact, but we just don't have that impulsive selling yet. So we need to see more selling. Ideally, we want to take out these lows right here at 306.90. It's about 306, 307. You take out those lows, and that sets us up for probably a larger move to the downside, most likely down to at least 298, but I think we're probably heading lower. Until we do that, we can back test some more. This trend line that we broke when we got that sell signal, we can do another back test. We can go sideways. We just don't have that catalyst to the downside yet. Again, I think the catalyst is going to come in the form of a gap down. So I think you'll wake up to indices gapping down, but until we see it, it's just not there. Moving on to the SPY. All right, so SPY, they're trying to recover this thing again, and they actually successfully did. So here's your uptrend line right here in the SPY in the hourly chart, this price channel. We've had 3 breakdowns from this trend line. Broke here, and broke here. Each time that it's broke, they have the dip buyers have stepped in and successfully recovered it. And today you can see that they did recover it, and we had the close above support. That's essentially that's what they were trying to do basically all day, is recover this. They did successfully recover it, so we'll see if that holds. But as of right now, that is above the support. So that is not bearish in the short term, and this potentially sets us up for more higher prices. Looking at the daily though, still have negative divergence. There it is, remains intact. It has not been negated. And if you look at the daily chart, you can see we just barely closed above support. So we got to see what tomorrow brings. Whether it's close enough, it's kind of too close to call. It's either a successful recovery or we'll get rejected here. But negative divergence remains intact, so that has not been negated. One possible outcome, if they recover it, is we gap up or move up to this 389. This blue line, tag that as resistance, and then we reject. We have not had a successful test of that trend line yet. And that trend line really brings us all the way back on the weekly chart to the bull market, going back to 2009. So here's your weekly chart. There's your 2009 lows. Here's how we held support here, held support through here, broke in 2018, back tested once, failed, and coming in for what looks like another back test. So that should prove to be major resistance. Whether they have a blow off top and break through it and rip higher, I don't know. That's completely possible. But as of right now, we're below resistance, and that should be major resistance. So we'll continue to watch that trend line. Looking at the long-term bonds on the daily chart, TLT here, update today. So bonds caught a little bit of a bid, not much, but a little bit. And the markets were going higher, but so were bonds. So we continue to see some, buying in the long bond. That is, that's potentially signaling, a correction in the market. One day doesn't make a trend, obviously, so we have to continue to watch this. But you can see at the hourly, we continue to move higher. So I'm watching this. This should move up if the dollar continues to move higher. And the dollar moving higher should be net bearish for the markets. The markets right now seem to be still in euphoria mode. They haven't got caught on to what maybe is potentially going to happen, but we'll have to watch that. Let's look at, and the other thing is on the long bond, you have you had bullish divergence right here on the hourly chart. But we don't have it on the daily. So here's the daily. No bullish divergence on the daily. So we could see more selling in the long bond. Maybe put in a bullish divergence on the daily before setting up a longer term trend move. So we got to watch that. Let's look at the dollar here. Dollar had a little bit of a down day. Nothing really crazy. And, the trend is really still intact. On the dollar, we have, let me get rid of that one. We have bullish divergence on the dollar on the daily chart, which is more significant, obviously, than the hourly chart. And that sets us up for continued rise in the dollar. A little bit of a pullback today, but nothing that really broke trend, nothing technically damaging. You can see we really still have what looks like an uptrend, something like that, in the dollar. So watch for that technical posture to change. Maybe we break down and, this was the end of the rise in the dollar. And if we do, that's likely to mean another leg higher in the markets. But we are at support right now in the dollar, so we could easily see a bounce. Gold's gone nowhere for a little while since the beginning of January. Same with the markets. They've kind of just gone sideways basically for a couple of weeks. And gold's kind of gone nowhere either. So the markets are really set up. They're trying to figure out where to go. Gold is still holding support. Let's look at the daily here. You can see there's your downtrend line in gold. False breakout right here. That false breakout was followed by huge heavy selling all the way down to kind of major support area. We broke out again, back testing, and we're just kind of holding that back test area, holding support. This could be a buying opportunity. I don't fully see it yet. We don't have bullish divergence in the momentum indicator. So what I'm kind of looking for is maybe a little bit more lower prices, getting down to the 1730 to 1750, 60 area, putting in a bullish divergence. I think that's likely to happen if you get a market correction. Gold might sell off, and that might be the area where it's, that would be probably a pretty good buying opportunity down there from my perspective. Here's XLE energy stocks. We got a little bit of a bounce today, up 2%. But to me, this looks like a bounce on its way to lower prices. So I'm looking for, next stop, about $42. We break that, and I think it's likely we head down to about $34.30. We also have the 200-day moving average, which is likely to provide some support there as well. So I think this bounce today is likely to be faded, and we're going to see lower prices in the near future. Why do I think that? Well, we have negative divergence across the RSI and the PPO on the daily chart, signaling that we're likely to see a trend reversal. So I'm just looking for continued proof that we're starting at a downtrend, and that is where I think we're heading. Etsy today, you can see up about 8%, but all it really did technically was run up to do a back test, similar to what we saw here on January 14th. So we've been backtesting this trend line resistance right here. This is, we tagged it here. They popped it again today. Technically, no damage. Nothing changed technically. We're just trading below resistance, running up, hitting resistance, and getting rejected. So I think until that changes, that is the status quo. We're just, likely to get rejected at resistance. Peloton had a nice down day. They tried to recover it. You can see here. So Peloton, bigger picture, you've got the March lows here. You had this big uptrend right here. And then you gap down, broke trendline support right there, but you didn't have any negative divergence in the RSI or PPO on the daily chart. So then we did a full back test right here. And from there, we got negative divergence right there. I marked it out, talked about it in the videos that day that we had it. And this is where I got short. Peloton, that position is profitable. Not a lot. It's about 6%, 7% profitable as of right now. Again, we now have negative divergence, so we're looking for a change in trend, which would be to the downside. Today, and then equally, we created the secondary trend line right here. You can see, if I go to the hourly, it's a little more clear. Usually these secondary trend lines don't hold as long, but you can see lots of reactions along here. We broke once. This is during the holidays trading time. So again, false breakdown, they're very likely. And then today, they broke trend line support again. So there's your breakdown here. And that's pretty impulsive too. That's an impulsive breakdown because you have a gap down. Trading closed on Friday up here. Anybody that was long most likely stayed long due to the fact that it was above trend. Here's your trend. And then today gapped basically right at support and then sold off impulsively, closing below support. You had a little bit of a kickback rally, but they weren't able to recover support. So that's pretty bearish. The fact that you had a gap down, an impulsive sell-off, and then a little bit of kickback, but not able to recover support. I think we head lower in Peloton in the future. Where's Peloton heading? Well, there's lots of levels. This thing's run up pretty high. We'll just have to watch as it goes. But I think it could potentially get down to this $80 area as potentially a final target, or a test of the 200-day moving average, potentially whichever one's first. If we go to the daily here, you can see here's your 200-day moving average running higher. So if this starts to sell off, the 200-day moving average is likely to start to turn down, which could fall in line with about $80. So we're watching for that one. The short trade continues to work, provided that you got positioned on that back test and when it put in that negative divergence. This one's interesting. The trade desk, you can see here's your March lows of 2020. Big bearish rising wedge. They broke it to the upside right here on the daily chart. This is a low probability area for price to continue. And then big impulsive sell signal right there where you broke back into the pattern, and then it pretty much sold off and broke back down to the bottom of the trend line. So here's your trend line support. Broke down, back test, and just kind of consolidating. To me, this looks like it's going to roll over, but we could obviously do some more back testing. We don't know when that back test is you don't know when or if it will end. It can obviously continue to back test. The only thing you can trade against is the fact that we've got negative divergence on the daily and on the PPO. We had a bearish rising wedge pattern that's now been broken. So in general, this chart is a bearish chart. So I think we're going to at least gap fill, which is down here. First target 660. It's about 660. Well, I'll have to tighten it up. Let me look at the hourly. It sits right about 668 or so. Obviously, I like to step in a little bit early because you're likely to get the dip buyer stepping in there. But I think we're likely to head down to that. It's about a 15% drop from where we're at. Let's look here. Yeah, it's about a 15% drop. So I think we're likely to get our first reaction down there. And we'll wrap up, or actually I got two more to point out. So we'll look at Citi. Short trade still working, still looks good. It's, you can see here, looking at the daily, this was the area, the red line, where I thought we were likely to, have a reversal and turn down. And so far, doesn't mean it's going to hold, but so far that's proven true. A little slight overshoot right here, and followed by 2 days of selling. A little bit, down another 0.8% today. So I think we're likely to gap fill. Dip buyers are probably going to step in there at around 62, get a bounce there, and then continue to head lower. I'm looking for much lower prices than 62 on this one. So we'll watch that, but I think financials are likely to go lower, and they were weak today. Okay, let's look at Nike. All right, I haven't talked about this for a while, but I've been watching it, and I've just been waiting for some sort of a trade setup. So you can see here on the daily chart, this is really the trend line that I have. We've got a couple reactions coming off the March 2020 lows, reaction cluster right in here. We had another reaction right here, and then another reaction right here. So this is the trend line that I have. It's kind of the I can't make a trend line that connects. If I move it around, it's the best trend line I can get with the most reactions. Zooming into the price action recently, you can see that here's your earnings. This is when Nike reported earnings, so they popped it on earnings. Again, it's not so much about what happens on the day of earnings. It's about kind of what the market does with it afterwards. And you can see here, popped it on earnings, but really been selling off since. Now we also have this bearish rising wedge pattern. See the wedge, how we've created this bearish rising wedge. You pop to the upside, that's oftentimes a fake out move, kind of a whipsaw move. They sold it down to support, popped it up again, and then now it's pretty impulsively sold off, broken support now. So it hasn't, we haven't broken support until just recently. Last couple of days we broke support here, and we've seen only selling since. Down another % today. So again, I think it's likely we head down to, I've got kind of the first level of support about this 136 area. We'll probably get a bounce there. But to me, this looks like a bigger pattern that we're going to start to roll over on and head lower. Where do we go? Well, I think it's very likely that we head down to what looks to me like the major support. Here's your 2009 lows on Nike on the daily chart. We've got lots of reactions along this trend line. You can see there, we got reactions there, reactions here, reactions there. They broke it during COVID, but obviously that was the Fed stepped in and recovered that. So I think we're likely to come in for another test of that trend line. And that's all the way down here at 95. Depending on when we get there, it's probably going to be a little higher than that. But from where we're at, that's a drop of about 30% or so. That is the short trade. We could get a little, could get up to this 102. We don't know where it's going to hit, but I think it's very likely we come down and we test that trend line support. So I actually took a short position on this today, starter short position, just starting to build. We'll see how it continues to act in the future. We've got a gap down here at 117.33, likely to get a reaction there as well. And that's what I'm looking for. You can look here on the daily, negative divergence. There it is. So all this bearish rising wedge price action has been divergent high price action. So I think we're likely to see a trend reversal down to this area, and that's kind of how I'm trading it. Okay, that's all I've got for today. Anything that really looks interesting. We'll continue to watch these markets, and I'll point out what I see throughout the week. So thank you. Leave a thumbs up if you find value in the content. Everything in this video is just my opinion, not trading advice. And I will catch you guys on the next one. Bye.